So now that we're post-halving for Bitcoin, I wanted to take a look at some high time frame, 18, 24 month targets for price. Mainly because over the past really few years since 2018, we've really been quite range bound in that there hasn't been a multi-year trend up or down. There have been plenty of multi-month trends. Over the past 6 months, there have been extreme volatility that, as a trader, has warped perception of the trend possibility, I think. So, as a trader, I like to look at high time frame stuff to see where are the targets that I can be looking for to help me remove my near-term bias of, range-bound, directionless, trendless, turtle soup type stuff. Random walk. I don't think it's random walk. But what are some indicators? What are some averages? What do we have for price discovery? When Bitcoin broke 1K, the previous all-time high, there really were no rules for where it could go, right? Like, that's what price discovery is all about. There's no left side of the chart to compare to. So if we break all-time high, which sounds absurd right now, as it always does, at 18K, 20K, whatever it is, on the BLX here, if that happens, things get interesting because you get all the news articles, you get all the retail FOMO, you get violent pullbacks regularly from late longers who get trapped at the top. You get people continually shorting every new high. So if we look in advance, this is however many months it is. Take a look back at this video in 2 years, I don't know. But if I'm looking for targets, using yearly pivots, using fibs, using pitchfork, using trend channels, what do we find? How do we use those? What do we measure them? The first one is fibs. So they're commonly referred to as Fibonacci retracements. They have a 1.618 extension, which is typically used by traders for targets when you are comparing extreme highs and extreme lows in price, or just a range in price. You can draw fibs from any level you want. It's completely subjective in that regard. The targets and the values it provides are not subjective. It's based on the high and the low. So one way to look for targets in price discovery is take the fib extension. You find this by going from the high to the low, and it gives you your 1618, which is around 30K there. Now you can pick any low you want. You can pick any high you want. That's why I illustrate two here. This is the July 2019 high, the March 2020 low. It gives you a 1618 around 18K. It gives you a 2618 of around 26K. You typically don't see Bitcoin go for the 2618 to 3618. However, Ethereum has gone that far. I'll show that on another article, on another video, some other time, but Ethereum really likes to go for way beyond the 1618. So if anything, these might be conservative targets over the next 2 years, at least the 18K. That's just the 1618. So again, this is subjective based on highs and lows. You can pick any highs and lows you want. You can pick any time frame you want, and it spits out the extensions for you. So these would be levels to watch. Now, what I commonly use this for is chart patterns. So when you get a chart pattern, you take the high, you take the low, it gives you the extension, and then you take the measured move, which is again from the high to the low, and you project that to the from the breakout point upwards or downwards. And then this gives you a range target before this breakout happens. So this looks retrospective, but trust me, these were the targets being projected at that time, just based on the fib extension, based on the measured move. If we switch gears to yearly pivots, these print on July 1st of every year. They are not subjective. They are purely based on math. You cannot pick the points you want these based off of. You can change the time frame. You can go monthly, daily, that sort of thing. I like to go extremely high time frame. What does the yearly tell me? These can generally be treated as a ladder. So if we break the first pivot, we generally reach for the next pivot upward or downward. We broke this pivot to the downside on January 1st, despite price just putting in an all-time high. The yearly pivot was predicting a target of around 3,300. And we printed that, or we met that target to the downside near the end of the year. Similarly, in January 2019, these two upside pivots, it's either the pivot, the resistance 1, resistance 2, resistance 3, or support 1, support 2, support 3. So we hit this pivot, went to the next pivot, and met resistance. In general, I don't use any of this stuff by itself. I use it in conjunction with oscillators, cloud, a few different other things. But if we'll take this one for instance, if I see a bullish divergence into a yearly support pivot, the probability that we continue pushing downward below that point decreases substantially. Similarly, if we make a high into a pivot and fail to break that high, we're usually in trouble and we go tumbling to the downside. Now, during low periods of volatility, pivots will contract, and during high periods of volatility, pivots will expand. So these pivots the 2018 pivots are based on the price action from 2017. The 2020 pivots are based on price action from 2019. So if this support doesn't hold, it says, well, we'll probably revisit this pivot at around 2300, right? That's how I read that. That's why this stab down was problematic, in that there was no yearly pivot support to the downside, right? Now this is just one indicator. Obviously you want to use a few different things. You don't want to use 100 different things, but you want to use a few different things to decide what's going on with price action. So yearly pivots to the upside are 13, 18.6, 24, 28, 33. Again, this is a ladder. So if we have this multi-month trend like we did in 2017, 2016, we start busting through these pivots month over month with conviction, similar to this, how we tested, danced around it, and then broke up. You can say with a pretty reasonable degree of certainty that we'll probably reach for the next pivot up. And just to show what that looked like in 2016, 2017, we supported this pivot, visited the R1, visited R2, rejected, bounced back to the R1, moved through the R2, moved all the way to 2017's R1, got rejected, went back down to the yearly pivot support, and it just goes on and on and on and on. Again, it's a ladder. Use it as a tool for support resistance levels to help remove bias from short-term trading, position bias, that sort of thing. If we look at the moving average channels, so this is a 2-year MA and then 5 times the 2-year MA, and it gives you this neat little oscillator situation where if price is below the 2-year MA, you can say, well, it's a pretty good buy opportunity. If price is above 5 times the 2-year MA, it generally says it's overbought. Now it can go way above it, it can go way below it, right? But it shows these support resistance levels, resistance support levels. It shows where good buy and sell opportunities are. It's based on the 2-year average of price. So upside right now is sitting at around 35.8, and this will continue to move up slightly, if this is a multi-month trend like it was here. The 5 times the 2-year moving average was flat, decreasing, and then month over month over month, week over week, it started increasing. And we'll start to see that again if price moves up over the next weeks to months. So similar to how we hit a couple times here, and then we exceeded it, and then broke down. So if anything, you can read this as we start to get overbought when we cross the 2-year 5 times the 2-year MA, and then when we finally cross below it, that's the sell signal. Similarly to the opposite, when we cross down to the downside, it's the get ready signal, and then the go signal is when we cross above the 2-year MA. Obviously, this is better if it's a multi-month trend, and it gets a little sloppier if it's just a few weeks, but it's caught the bottoms on all of these lows so far, historically, since 2013. And if we look at some random stock like Tesla, Tesla hit whatever price, nearly hit 1,000, right? And in retrospect, using similar MA averages principles, you can say, well, it made sense, right? Like, this is the 2-year MA. This is, I changed it for this is the 2-year MA, 2 times the 2-year MA. So explaining the article, you have to curve fit a little bit of the back testing. So, 5x the 2-year MA here was too high. None of the resistances made sense, right? If we dial it down a little bit for Tesla specifically, we can say, okay, it was resistance here and it failed to breach it, right? So it should be resistance here, and it was again. So to me, this says going forward in the future, 2 times the 2-year MA, in this case for Tesla, should make sense. So I wouldn't expect anything higher than 2 times the 2-year MA in this case. Again, it's overbought up here, oversold down here. You can see it catches all these bottoms, catches this Adam and Eve, it catches this entry, it gets you out at the top here, gets you out near the top up here. So you can see when things are getting a little hot, when things are getting a little cold, ready to buy, that sort of thing. If we look at another trend channel for BTC called the log growth curve, we can see that again, it shows you highs in price where you expect to meet resistance. It shows you lows, which suggest buying opportunities. So currently it's projecting a median of 24,000, a maximum of 68,000, 67.5. And you can see this is going to continue to move up weeks and months to come. And it's hit all 3 of the 4 all-time highs, right? All-time high 1, 2, 3, 4. So it's projecting on the next all-time high to be around 67.5 or higher. And then lastly, if we just look at the pitchfork. So this is a chart on log scale, and log scale will linearize exponential growth. So that's why you can look at BTC on the log scale and use a pitchfork, very similar to the log growth curve. It doesn't tell you necessarily upside targets, doesn't even tell you downside targets, but it gives you a nice true north of where price historically should be based on the trend. Like, what is the mean of the trend, right? You can see how perfectly it just captures all of this. And when I was learning about pitchforks in 2015, 2016, I was like, wow, this looks really good, right? On pitchforks, because it captures the whole thing. And then all of a sudden we explode below it or explode above it, and we revisit that median line, explode above it, revisit the median line, explode to the downside in March, revisit that median line again. So no matter what's happening on a day-to-day basis, a month-to-month basis, the pitchfork will give you a sense of historically where price was, where it should be in the future. It gives you a time component, just like this log growth curve does, a time component for expectation of price. So using all this stuff together, you can start to build your resistance levels. You can start to plan trades months ahead of time if and when those targets come. You know, if we get above 20K, for instance, we're in price discovery, right? So there's no way to measure this other than using previous price action below all-time high zone. So using math, that's what all of these indicators are attempting to do.